Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. REXR is California's industrial real estate a golden investment. Q4 earnings, company overview, and industry outlook. Rexford Industrial Realty, REXR, is a real estate investment trust, REIT, specializing in acquiring, managing, and redeveloping industrial properties in Southern California. This region is one of the largest and most competitive industrial markets globally, characterized by high demand and limited supply. REXR's business model focuses on increasing property values and rental income through strategic acquisitions and operational improvements. Financial performance and forecasts. Q4 2024 results. Funds from operations FFO, 58 cents per share, up 3.57% year over year, in line with analyst expectations. Earnings per share EPS, 27 cents, down from 29 cents YOY. Revenue, $242.9 million, plus 15.4% YOY, slightly below estimates. Projections for 2025 to 2027. Revenue expected to reach $1.05 billion in 2025 and $1.39 billion in 2027. EBIT projected at $423.8 million in 2025 and $616.1 million in 2027. Key financial metrics. Dividend, $0.4175 per share, yield of approximately 4.1%. Debt ratios. No precise data available on debt to equity, D/E, and debt to assets, D/A. Net asset value, NAV, $35.90 per share. Price to NAV ratio. The current stock price is $40.77, meaning REXR trades at a premium to its book value. Why is this a downside? Investors are paying more for the company's assets than their accounting value. This suggests the stock might already be expensive, limiting future upside potential. During economic downturns, stocks with high premiums to NAV often experience price corrections. Occupancy rate, historically around 98%, but no recent data provided. Cap rate, expected to range between 4% and 5%. Weighted average lease expiry WALE, around 5 years. Market trends. The industrial real estate sector remains resilient, but economic slowdown may limit rental growth. High borrowing costs impact new developments, possibly restricting expansion. U.S. inflation is declining, and GDP growth is slowing, suggesting the economy is in either a recession or early recovery phase. REITs like REXR should perform better than tech stocks, but may underperform sectors like healthcare and consumer staples. Technical analysis and options activity. Support level, $40.10. Resistance level, $40.78. Average investor entry price, $40.44. Last 5 days, significant capital outflows, with 16 million shares sold on February 4th. No major options activity suggesting a short squeeze. Insider trading and analyst ratings. No significant insider transactions reported. Analyst ratings. 3 buy, 4 overweight, 9 hold, 1 underperform. Average price target, $45.94. Range, $40 to $58. Impact of trade war and economic factors. U.S. trade war with China, Mexico, and Canada could reduce import-export activity, weakening demand for warehouse space. Federal Reserve interest rates, currently high, but stable. If rates start falling in 2025, this would be positive for REITs like REXR. Conclusion: buy, sell, or hold. Reasons to buy: strong dividend and consistent FFO growth. High-quality industrial real estate portfolio in a supply-constrained market. Potential interest rate cuts in 2025 could boost REIT valuations. Reasons to sell: Economic slowdown may soften demand for warehouse space. Stock is trading at a premium to NAV, potentially limiting upside. Heavy capital outflows in recent days suggest selling pressure. Final verdict. If you're looking for a long-term dividend-paying REIT, REXR is a solid choice. If you're expecting short-term price appreciation, it might be wise to wait for a better entry point. This is not investment advice. Always do your own research. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016, supplementing Regulation EU. Number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.